Hello traders and welcome to lesson 5. In today's lesson, I'll be breaking down the SMC strategy, a strategy that can help you get sniper entries and help you improve your trading results. So let's begin. So the SMC strategy is basically the break of structure plus mitigation, meaning price will always go back to tap into the origin point of interest or order block that caused the break of structure. So let us begin. So this is where that's what we have in a bullish scenario. We have price breaking structures to the upside. We have price breaking structures to the upside, and then this is your break of structure. So that is your break of structure. So that is our break of structure. Let me clone that. And then we have price breaking structures to the upside. So when price breaks structure, price will always come back to the order block or origin which caused the break of structure. So that is how price moves. So price reacts off the order block or the origin which caused the break of structure. So that is what we have in a bullish scenario. And then the second bullish scenario that we have, let me just delete that. The second bullish scenario that we have price breaking structures to the upside like that. So in the first scenario, price reacted off the order block. So that is our order block. And then we have a break of structure. We have a break of structure to the upside. Now, if price is not, let's say price broke structure, and then that is our order block. That's the order block which caused this break of structure. And then sometimes price can react off the FVG or the fair value gap. So if price comes like that, and then it does not react from the order block, it reacts off the FVG. So in a bullish scenario, that is what we have. So sometimes price can break structure, and then instead of reacting off the order block, it might react off of the FVG in an uptrend. Now if we go to the bearish scenario in a downtrend, let me remove that. So we have price breaking structures to the downside like that. So we have a break of structure right there. That is our break of structure. And then what happens when price breaks structure? Price will always go back to tap into the origin which caused this break of structure, into the origin or order block, into the origin or order block which caused that. OB is short for order block. So that is how price moves. In a downtrend, price will break structure, and then it will always go back to tap into the order block or origin which caused this break of structure. And then if price is not reacting from the order block, say if that is our order block, price breaks. Sometimes price does not react from the order block, sometimes it reacts off of the FVG. Say that is our order block, and then price breaks structure, and then however it does not react from the order block but reacts from the FVG or the fair value gap. Fair value gap, FVG. So that is how price moves. Sometimes price breaks structure and then react off the FVG, or sometimes it breaks structure and then it reacts off the order block or the fair value gap. So those are the entry scenarios. Now that you know the entry scenarios, let me take you to the chart and show you how to use the strategy to help you get better sniper entries. From the daily time frame, this is how you can use this strategy. So let's start here. So we have a break of structure right there. So that is our break of structure. That is a break of structure. What happens when price breaks structure? Price will always come back and tap into the origin which caused this break of structure. Now the origin is always the last. The origin is always the last internal break of structure. That is your origin. So that is your origin. Price breaks structure and then it will come back and always tap into the origin which caused the break of structure. So you can see price broke structure. It will always come back to tap into the origin or order block which caused the break of structure. So that is our order block. So that is our order block. And then we have there the break of structure. That is the break of structure, like that. And then let's move. So we have a break of structure right there. That is a break of structure. So that is the break of structure. And then that is our order block. Our order block is always there. Our order block is always the last candle before the impulsive move down, which is that one. So that is our order block. So that is our order block. So that is our order block. And then that is there, the break of structure. That is another break of structure. sorry, the order block for this one is here. Yes, that is the order block. Price broke structure, and then to always come back, tap into this origin, which caused this break of structure. So we have a break of structure right there. A break of structure. So that is the break of structure. And then price is coming to tap into this origin, which caused the break of structure. So from the daily time frame, that is there. That is where we are currently at. So price break structure to always come back to tap into the origin, which caused that break of structure. So currently price is reacting off that order block. Price is reacting off that order block. Now if we go to the 4-hour time frame, so from the 4-hour time frame, so that is what we have from the 4-hour time frame. So from the 4 hours, that is the order block. Yes, from the 4-hour time frame, that is the order block. So for GBP USD, we can expect price to continue buying or break this order block and continue selling. One can expect on GBP USD. But yes, that is how the strategy works. If we go to the Euro USD, if we start here, we have a break of structure. That is a break of structure. And then our order block, that is our order block. However, as we can see, price did not react from the order block. So that is the break of structure. So that is there. That is the break of structure. Price will always come back to tap into the origin, which caused the break of structure. However, for this one, that is our order block. That is our order block. However, price did not react off the order block. However, it reacted off the FVG. Price reacted off FVG. So if price is not reacting from the order block, then it's reacting off the fair value gap. So for that one, that is what happened. And then we had a break of structure right there. That is a break of structure. That is the break of structure. And then that is the order block. It's always this candle before the impulsive move down. As you can see, price broke structure and then it came back to tap into this order block, which caused that break of structure. like that. And then we had a break of structure right there. That is the break off. That is a break of structure. That is a break of structure. And then price will always come back to tap break of structure. Price will always come back to tap into the origin, which caused the break of structure. In this case, it's always the last internal break of structure. That is your order block. So the order block is the whole body of the candle, like that. So that is your order block where price reacted off. Yeah, so for that one, that is what happened. And then we had a break of structure right there. We have a break of structure, and then the order block is always that the last internal high. So that is your order block. So that is your order block where price is currently reacting off it. So that is the order block. So for Euro USD, it's currently in an uptrend as we are breaking structures to the upside. So the next move we can expect is for price to go and break that high, and then that one will be a break of structure to the upside. So that is how easy the strategy is. It's very easy, as it will always give you sniper entries. So if you go to the 4-hour time frame, you can adjust it. You can adjust like that. So that is your order block. As we can see, price always breaks structure this high, and then to always come back to tap into the origin, which caused the break of structure. So that is how the strategy moves. That is how it works. Always works. Price broke structure, price came back to tap into the origin, which caused the break of structure. When that happened, when tapped in, it went up. So let us do the last one in a downtrend now, which is volatility 75 1S. So we have price breaking structures to the downside. So we have a break of structure. We have a break of structure, and then price will always come back and tap into the origin, which caused the break of structure in that case, which is that order block. It's always there, the last selling candle before that impulsive move. What happened when price broke structure? It went back to go and tap in, and then we had another break of structure right here. So that is there, the break of structure. And then we have order block there. Break of structure, price going back to take in the order block, and then we have a break of structure. So price went to go react off that order block. So we broke structure, price will always go back to go and tap into the origin, which caused the break of structure like that. And then we had a break of structure here. So we have a break of structure right here. So we have a break of structure, and then price will always go back to go and tap into the origin, which caused the break of structure. In this case, that order block, which is the last candle before the impulsive move. Look at what happened. Price broke structure and then went to go tap in, came back down and went to go tap in that order block. Look at the move that emanated from that order block. It's a very nice selling momentum. You see, break of structure. Price will always go back and always go and tap into the origin, which caused this break of structure. And then we have a break of structure right here. So that is a break of structure. So that is the break of structure. And then the origin is always this last candle before the impulsive move to the upside. So our order block is that. So that is our order block. So that is our order block. Right now, we can expect price to go and tap into that origin or the order block, which caused this break of structure. And then we can expect a move down like that. So that is how simple the strategy is. It's always the break of structure, mark your order block, wait for price to get there, and then you take your entry. If we go to the 4-hour time frame, you can be able to adjust the order block from the daily to the 4-hour. So right now we have broken structure. We're just waiting for price to go and tap into that order block. And then if price does not tap into the order block, it might also tap into, if price does not react from the order block, it might always come and react in that fair value gap. So that is how the strategy works. Price always reacts from an order block or from the fair value gap. So you just have to choose your instruments that you're trading and then know how well it reacts to the order block or the fair value gap. But yes, that is the move that we can expect on volatility 75-1S. Alright traders, thank you so much. If you did get something out of this video, please do give it a thumbs up and consider subscribing to the channel and drop a comment in the comment section, and then I'll see you in our next lesson.